to another coffee hour, another stream, and another bloody day in the markets. Today was crazy. Today was absolutely crazy. If you're like anything like me, and I'm sure you probably are if you're watching these videos, you've been seeing and experiencing a lot of red in your portfolio. But I just want to at least reassure you guys, like, look, this is long term, all right? You guys are investing for the long term. If you look out and you zoom out, 2, 3, 5, 10, 15 years, what is this little blip? All right. If you're investing responsibly, okay, you're not just putting your stuff into really super high risk assets, then you're probably doing very well for yourself. All right. You're probably doing very well for yourself. You're not too worried. Okay. I did publish a video yesterday or today or something like that. I did publish a video on margin stacking and how to do it properly. Okay. And again, if you're going to be taking margin, understand that there is a high level of risk associated with margin. And it's even, you increase the risk when you invest that money into very high risk assets. Okay. So you have to be very careful how you utilize margin. Okay. That whole video was just a kind of a warning to everybody, what not to do. And I'll be publishing a more in-depth video on margin stacking and using margin for your portfolio probably later in the future. I've never used margin up until recently, up until the last week. And all the things I learned about it and how to use it properly is actually really, really interesting. So I think you guys will get a lot of tremendous value from it. This is going to be a very quick stream today because we have, Donald Trump that's going to be addressing Congress at 9 o'clock. And I definitely want to be available for that when it does start to get aired, because it's going to be some type of massive announcement. Not to get into the geopolitics side of things, but he did just cut aid to Ukraine. So we'll see what that means. Maybe they reach a peace deal or not, or something like that. But anyways, more back to finance. Let's take a look at the portfolio and start diving into stuff, guys. Again, we got some news to cover. This will be a quick stream, and let's get into it. All right. Hey, good morning, retired. Hey, welcome back. All right, so this is the portfolio right here as it is today. Obviously, like you guys, I've taken massive hits. Okay, I've taken a lot of massive hits. Right now, it is currently generating 50,000 a year. March income is supposed to be 4,200. I don't know if that will actually happen because a lot of these cover call ETFs, a lot of these income ETFs, they can have fluctuating dividend weeks and months. So we'll see what happens. Okay. Currently dividend of 9.96. Now I want to show you guys this right here. This is $70,000 worth of margin. Okay. $70,000 worth of margin on the cover call ETF stack. Okay. So when you take on margin, your butt gets kind of clenched when you start seeing a lot of red. All right. When you start seeing a lot of red in the markets. And this is why I made that video about margin stacking. All right. Be very careful in how you do and how you take on and how you deploy margin. All right. Because if you don't have buffer, you're going to screw yourself over very bad. Okay. So we have a book value altogether, about $552,000. We dropped about $5,000 or maybe $4,300 from the actual book value. And then, for market value, I'm down about, I don't know, like 18, 20,000 or something like that. So it is recovering. It was nice to see that the REIT portfolio was actually going inverse of what was happening to tech. So as tech was falling, free falling, REITs were actually doing really well. They were holding up very well. So it's almost like I was neutral in this portfolio, which is kind of nice. All right, so let's move on to the news section, and then I'll show you guys the actual portfolios in just a moment. And I want to show you guys how one of my theses so far is playing out. So it might be good, might be bad. So I just invested into Palantir, and I didn't even know Palantir is available overseas, but apparently it is. And if it wasn't before, this is interesting because, Palantir is now breaking into different markets, which I thought was kind of cool, especially European markets. All right. EU. So if they're going to go international, like that is really cool. I didn't see anything, or I didn't hear or read anything that Palantir was operating overseas or in foreign markets. So again, to me, this is really interesting, and I'm an investor in PLTW, which is a leveraged ETF on Palantir. So just real quick, Societe Generale partners with Palantir Technologies to battle financial crimes. Again, just the use case for Palantir. All right. It's not just for intel collection. It's not just for, logistics. It's not just for healthcare. It's also for finding and solving financial crimes. Again, Palantir is one of those very special softwares that can do a lot of different things. And people think, like this is simple, like you switch, if this company was to lose a contract, it's as simple as just turning it off. No, it is not simple as just turning it off. To own Palantir on the network and thousands of computers and throughout the entire organization, costs a lot of money to license it. And if they were to take away that license, say they end the contract with Palantir, well, Palantir is just going to revoke that license and the software becomes useless. All right. So this is what's known as vendor lock-in. When these companies, these departments, the military, these alphabet agencies for America, when they start using Palantir, they're basically locked into it. Now, there is a case out there, a case study out there that's basically saying that, Palantir may have to adjust and be more vendor neutral, where they'll have, different softwares interoperate with Palantir. So we'll see how that comes out. But this is why I like Palantir. They're very sticky, and they're hard to get rid of, which is exactly what I want in a company. Okay. Especially when they're dealing with the government. All right. Anyways, they're basically going to help Societe Generale with anti-financial crimes. So this is, again, very interesting. All right, moving on. This is the big one right here. This is the biggest piece of news right here, especially for us who've been feeling really red and feeling down in the dumps, worried about the future, worried that the end of the stock market is nigh, that we're losing tons of money, we're bleeding out, and there's no stopping the gushing of our money out of our portfolios. Trump could scale back Canada-Mexico tariffs Wednesday, Lutnick says. And Lutnick is the Commerce Secretary, okay? President Trump will probably announce a compromise with Canada and Mexico as early as Wednesday, which could scale back his new 25% tariffs on top U.S. trading partners. All right, and that's going to be Canada and Mexico. And that comments came after the U.S. stock market limped to a close for a second day of sharp declines. Now, on Friday, I mentioned this. And I hate to sound like that guy, but on Friday I mentioned it. Trump does stuff like this. Like last minute, he reverses course. He's done this so many different times. When Monday came, I thought he was going to reverse course on Monday. Didn't happen. As a matter of fact, he held a press conference that day and basically said that, yeah, there's no going back. He's going to implement these tariffs, right? Despite Mexico deploying troops to the border, despite Canada ramping up its monitoring efforts of its border with the United States. And then, again, the United States is working in conjunction with the Mexican military and the government to basically monitor that border using drone technology and training their military. So again, I could not see a reason why we would be putting tariffs, but again, I'm not the president of the United States. All right. But I found that just odd, and then come Tuesday again, bloody day in the markets. And then now this piece of news comes out that he might reverse course. If he reverses course, that is going to be a huge relief for a lot of markets. So I know it's been scary these last couple of days, but like I always have said in my previous videos, when there's chaos in the markets, there's opportunities. And there was an abundance of opportunities. It's just, maybe people weren't looking at it, or they were looking at, what's happening at face value, right? Markets go red, this is bad. I'm losing money. The fear starts to seep in. All the news is telling you everything's going bad. We're going into a bear market. We're going into a recession. World War III's around the corner. Everything's going bad. And then, reverse course. It's like reverse Uno. Yeah. So it's crazy, guys. Like, you have to look beyond the news. All right. You have to look beyond that stuff. And this is what I'm trying to achieve with this channel. It's not just financial news. Like, you get a macro picture of it, but you have to look beyond it, right? I bought when there was a lot of blood in the markets. My portfolio was bleeding like crazy, but that didn't scare me one bit, because I know there's opportunities out here, guys. There's opportunities to be had. Plenty of opportunities. Okay. So anyways, let's just move on. So President Donald Trump will probably announce tariff compromise deals with Canada and Mexico soon. Commerce Secretary Howard Lutnick said Tuesday the potential agreements would likely involve scaling back at least part of Trump's brand new 25% tariffs on imports from Mexico and Canada. Lutnick's comments came in after the U.S. stock market limped to a close for a second day of sharp declines. After his remarks, the U.S. stock futures tied to all three averages rose. So the NASDAQ futures, the S&P 500 futures, and the DJI, Dow Jones Industrial, all rose. Okay, so this is good. This is good. This is telling us that, the market is reacting, but again, you still want to approach it optimistically or have, you don't want to be overly optimistic and say that, oh yeah, this is all good. We're going to be happy tomorrow. Everything's good. Because again, in perfect Trump fashion, he could just change his mind or something could change. Okay. Something could change behind the scenes that we aren't privy to. All right. The compromise with Canada and Mexico will likely be revealed as soon as Wednesday. All right. So that will be interesting to see. Okay. Very interesting to see. All right. Trump to deliver a big televised speech to Congress tonight. Okay, tonight, 9 p.m. Eastern Standard, if I'm not mistaken. All right, I want to be on this. So this is why I'm going to cut the stream a little short today, but I definitely want to be on this. U.S. President Donald Trump will deliver a speech to Congress on Tuesday evening in which he is expected to discuss new U.S. trade tariffs and the war in Ukraine. Okay, I'm predicting that he's probably going to talk about EU. Right, he's gonna probably bring up the EU. He's probably gonna bring up China. I think the China stuff is going to stick. Honestly, I really do, and I think that is because of they're our biggest rival, they're our biggest competitor, and Trump wants to bring them to the table to negotiate. Again, I don't want to get into the politics or geopolitics of things, but I just want you guys to be aware of all this stuff. For Canada and Mexico are some of our biggest trade partners. I think those tariffs are going to get lowered a lot, if not removed. Okay, I don't know what specifically, but I think the tariffs are going to get probably reorganized a bit, and it's going to be very favorable for us as consumers, for us as the American people, and for us as investors. Okay. Let's see what else we got. The theme will be the renewal of the American dream, yada, yada, yada. All right, we're going to just skip all of this stuff. Okay, so how did the markets do? Obviously not very good. Massive, sharp decline right in the evening time or right in the afternoon, late afternoon trading session. Not good. Obviously, whenever an index falls about 1%, you can tell it's going to be a bad day. All right. And again, I made a video on margin stacking. You guys should check that out, where I was looking right at the futures for the S&P 500, and it was trending downward about almost 1%, right? I think it was like hovering at like 70 and 80 basis points, and then the rest of the stuff is a telltale story of what happened, right? So yeah, bloody day in the market. NASDAQ 100, same exact thing. It looked like it started to recover towards the end of the day, and then it just had a sharp decline. Okay, a sharp decline. I think that this was probably on some type of hype. There was a couple companies that were doing really well that probably propped it back up. I'm not sure why. I didn't have a chance to actually dig into this because it did look a little interesting. We could take a quick look. We could take a quick look at it since we're on the topic. Yeah, so I mean, it was a pretty bad day, but you had NVIDIA, Google, and it looks like a couple AMD. Yeah, a lot of tech companies that seem to have done well. Adobe, there's Palantir. Hey, what's up? There's Palantir. You guys are sleeping on Palantir, man. I'm telling you. I did a whole video on why I'm bullish on Palantir, but whatever. This is just a thing. It'd probably be read tomorrow. There's Oracle, Microsoft, Amazon has just been getting slaughtered. Tesla's been getting slaughtered. This is because of the whole declining sales thing, and a lot of people are vandalizing Teslas. We have Meta and Google. All right, so I think this is what probably propped up the market a bit, and then again we just continued going down. Bitcoin, again, look at this stuff. Look at this stuff for Bitcoin. All right, this to me is worrying. I don't know about you guys, but this to me is worrying. Again, I covered this on Sunday. They freaking announced it. It spiked up. I think there's a lot of insider trading right before the announcement. Obviously, I think there was, and it spiked, and then everyone just started dumping. And then it just kept dumping and kept dumping and kept dumping. And then again, oh, we're going to do a crypto summit. You know, we're going to invite all the bigger players here. We're going to talk about how great Bitcoin is. This is going to be good. And look at this, right? Bitcoin shot back up again. And it looks like it's trending downwards. I don't know, guys. You tell me. I know we're all long-term investors. And you know, in 2, 3, 5 years, this chart will probably be irrelevant. But you have to look at what's happening also behind the scenes. Whenever this news stuff comes out, it seems like there's always hype. There's always some type of hype. There's always a jump and or a massive steep decline. So I have my own thoughts about what's going to happen on Friday. You know, I have my own thoughts, but again, I'm a long-term investor, so I don't really care. You know, what if Bitcoin next year is at 160,000, right? Or 170,000. I'm just throwing out what ifs, right? But what if? And wouldn't it have been awesome to at least get, you know, a 50% gain or something like that, or 50 or 75% gain or 100% gain on the way up? So again, like, even though all this crazy crap is happening, you know, still take a long-term approach, take a long-term viewpoint on this stuff. Okay. Cause again, if you zoom out, totally different, right? The picture starts to change. Okay. Maybe we're like right at this, we had our second spike. Maybe we enter just a bear market or the crypto winter. I don't know. Right. I don't know too much about all these seasons that crypto has, but yeah, that's it for the crypto portion. Gold again seems to be the best, asset class of 2025 so far. All right. It is still outperforming. It is still slaughtering. A lot of investors are still moving to gold for a safe haven. So again, this is telling me that, you know, there's a lot of fear in the markets, a lot of fear, uncertainty, and doubt. So we'll see what happens tomorrow. Well, we'll see what happens tomorrow after President Trump announces his tariff relief, if he does. And then we'll see what he's also going to talk about tonight. Okay. Very big stuff. 10-year treasury actually spiked up a little bit. So that kind of sucked, but is what it is. My REIT portfolio obviously reacted and went down, right? Like I always say, when rates are up, REITs are down. And then when rates are down, REITs are up. Okay. So real estate market sold off. But what was interesting, and I want to show you guys this, what's very interesting about this and a very critical point in investing is, and I know there's differences of opinions out there, but we talk about diversification. Okay. It's just a prudent thing to do. All right. It's just a thing that investors should consider for their portfolios. Some will have differencing of opinions. Some will say be concentrated in a couple different positions, call it a day, your highest conviction picks, etc. Others will say, no, you should be diversified across asset classes. Okay. I'm of the camp probably with diversification. Okay. In certain aspects, in certain regards, yes, you can concentrate in certain areas, but it doesn't mean that you have to be concentrated in everything, right? It really all depends on you as the investor. All right. So real quick, I want to show you guys a portfolio. I have to log in because this thing just logged me out, which totally sucks. But I want to show you kind of the power of diversification. Password 123. All right. Okay. Let's see. Get this over here. Wait a minute. Wait a minute. Okay, cool. This is it right here. All right. So this is the core portfolio on M1 Finance. I hope you guys can see this. Let me make sure. Okay, you guys can see this. Okay. So this is the core portfolio. Here's something that I thought was really cool and kind of shows you why diversification is so important. Look at these two. REITs to technology. Technology has been dumping like crazy. REITs, actually, this was at 11% earlier, 11% before I went to bed here in Thailand. So this was at like 11.5 or 7%. This was up $16,000. Like this was up to $16,000. Meanwhile, this one was struggling and dropping down. You see how like basically you have real estate, like the asset class that's increasing in value versus technology that's taking a dump, right? And this has always been the case with real estate or REITs. where they zig, wherever the greater, broader stock market zigs, REITs will typically zag because they're a completely different asset class. So I just thought that was really interesting and a good example to show people because these differences can make a difference, right? Like this can make a big difference. Now, if technology starts rising again after, and we have to know why this is happening. So we know technology is crashing because it's, a tech heavy ETF. A lot of the tech companies are trending downward because of all this trade talk and tariff and fear and yada, 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 et cetera. So that is what's driving technology down, but it doesn't mean the companies are doing bad. All right. We talked about muted growth for the Magnificent Seven, right? For the biggest technology stocks. We talked about muted growth potential or stagnation or stagflation. We talked about all this stuff, right? I think that that's a possibility of, or news of why VGT is kind of going or trending downward on top of everything else, right? Whereas REITs are starting to recover because the 10-year Treasury is coming down. The Secretary of Treasury, Scott Bessent, and the Trump administration is focusing on bringing down the 10-year Treasury. Screw interest rates. We don't care about the Federal Reserve at this point. We care about the 10-year Treasury, which is going to be monumentally helpful for real estate, right? Home builders, multifamily apartment complex, real estate investors that need to cash out refi, investors that, maybe not even investors, maybe it's just a regular mom and pop that wants to buy a home, right? Start the family up, but they can't because mortgage rates are too damn high and housing is too expensive, right? So they're focusing on that, which is a good thing in my opinion. All right. So that is that for this portfolio. Of course, I have a little bit of crypto in here. This is a crypto ETF, IBIT, from iShares by BlackRock. All right. So I have my money in here. And actually there was an article, I don't have it, but there was an article, I think on March 1st, where they were saying there's a lot of hedge funds or institutional fund managers. And some of these are like really, really big names out there. I can't remember their names for the life of me. I'm like running on 5 hours of sleep, so I apologize. But these fund managers were selling a lot of their NVIDIA stakes and moving it into IBIT. All right. And as you guys know, I have IBIT. I posted it to my Instagram. So if you guys want to check out my Instagram, you guys can see it in the story. I think it's still available. But yeah, like they're moving their money into IBIT. All right. And with everything going on surrounding Bitcoin, again, I'm holding this for the long term. That's it. That's all there is to it. I don't care about the short-term volatility. I don't care about the rug pulls or rug pulls by the president or his buddies. I don't care about any of that. I care about checking this probably in 5 years and seeing it in the green some amount, right? And I'll just continue dollar cost averaging into IBIT. And then just holding it again for the long term. All right. This is really not a core holding. This is probably my least exposed asset in my entire portfolio. So yeah, that's that. All right. Let's take a look at Robinhood real quick. All right. So this is Robinhood. Okay. Oh my God. I might have to zoom out a bit. There we go. All right. So this is Robinhood, guys. I have just a very small amount of XRP. Okay. This was bought on FOMO. I don't know if I'll add to it. I might, who knows? But yeah, this is not exactly like this was play money. All right. Stocks, we had PLTW, XDTE, XPay, and YF. All of these were taking a pounding. All right. Taking a pounding. Something interesting. And I don't know why it's not here, but PLTW actually, was up 1,300 if I'm not mistaken. Yeah, I was up $1,300 on PLTW, which was really, really a welcome sign. I was like, thank God, like finally. But PLTW is, there it is right here. So PLTW is a leveraged ETF on Palantir, and I'm very bullish on Palantir. I gave you guys a whole video that explains my thesis behind Palantir. You guys can look in my videos and check it out. I'm very bullish on Palantir. So if this is a reversal for Palantir, I'm all for it and I'm excited and I cannot wait to see what this company has for the future. This is going to be more so a swing trade for me. I'm not going to hold it for the long term. We'll see how it goes, what happens. But yeah, this is going to be more or less a swing trade for me. Maybe 3 to 6 months, maybe 3 to 6 weeks, right? Maybe I'll just hold it for a year. We'll see what happens. It really depends on how Palantir is going to act. Okay. So that's pretty much that for this portfolio, again, I just want to touch on margin. All right. I cannot stress the freaking importance of being careful and being a good steward of your money, and being a good steward of margin. Margin is debt, and debt is a loaded gun. You have to be freaking careful how you deploy margin. All right. This was $36,000 and it started dropping, right? A lot of people are in high risk and they're probably $100 away from a margin call. And that is because they're not stacked appropriately. They're not stacked correctly. You need to review the video I have if you plan to take on margin. You need to review that video so you understand the concept of how to do a proper margin stack. And again, I didn't come up with this concept at all. This is a concept from Oracle ETFs. You guys need to check them out, etc. But look at that. Like, look at the safety. I have a huge amount of safety right here. 34,000. This portfolio would have to drop 34,000. And the beauty is being in something like xdte or xpay, which is the core position. They're basically the foundation of this margin stack. These follow and track the S&P 500. If the S&P 500 drops 1 or 2%, no big deal. But look at something like Palantir or YETH. This thing dropped, let's see if I can find it. It dropped like 30%, right? From its all-time highs. Like it dropped, look, almost 30%. Imagine if I bought this and then took out margin against this. It wouldn't take much for me to get a margin call and then have to sell at a massive loss, right? So you amplify your losses. So again, you got to be freaking careful how you stack your margin if you plan to do it. And I'm not telling you to do your margin. I'm not telling you to use margin. I'm telling you guys, if you plan to do anything with margin, please be careful. I'm seeing a lot of YouTubers starting to regret using margin, right? They're getting margin called left and right. These bloody days showed exactly who was swimming in the ocean without any pants, okay? Don't be like those people. Be responsible, be smart, be, a good, prudent investor. That's what this whole channel is about, all right? We're not about degenerate investing or gambling with our money, okay? There's channels for that. This is definitely not one of them. But I have $20,000 in YETH. And again, a 30% dip for me, that's an opportunity, right? This is a cover call ETF, a cover call strategy ETF. So I will be able to make money on the premiums, on the volatility of this particular, crypto coin. So I hope I addressed that very well, guys. Again, I'm sharing this with you on the stream because I care and I don't want to see you guys get screwed. I woke up and I saw just margin call on several other people's accounts. And it's sad. All right. And then other people watch those videos and they're like, oh, this is normal. This is supposed to happen. No, it's not supposed to happen like that. All right. So be responsible. Okay. Real quick. Let's see. We're at minute 30. So I'll spend another couple minutes and then I got to hop off, guys. But let me check the comments real quick. James, hey man, yeah, it was an absolute roller coaster. Welcome back. Yeah, buying a little bit each day. That's the best way to do it, man. Just a little dollar cost averaging into some of your favorite stocks. If you liked them at this price, and you're gonna like them at a lower price. Of course, that doesn't mean keep buying all the way to zero. But I mean, your portfolio better than I do. BR Supreme says, is Trump reversing course on Wednesday for no reason, or did Canada and Mexico relent and make concessions like Zelensky did after the Trump cut off military aid? That's a good question. I think there was a bigger freaking scam to all of this. I'm going to just say it for what it is. I think Trump did that. He's done this kind of stuff in the past. He'll get Canada and Mexico on their back foot, trying to defend themselves. But America's just too damn powerful. These tariffs are going to hurt everybody. And, but it's going to force concessions. I definitely think it was going to force concessions or something from Canada and Mexico. And hopefully it did. Hopefully the Trump administration was able to come to an agreement and they're going to lower the tariffs or remove them altogether, because that's going to send the stock market flying. But again, speculation, we got to be careful. All right. But I am still of the camp that Trump is going to reverse his freaking tariffs. All right. And again, like, he's done this stuff before so many times. It's almost part of like his Trump playbook. But we'll see. We'll see. All right. Zelensky said, my team and I stand ready to work under President Trump's strong leadership to get a peace that lasts. if Trump or anyone says democracy during that speech, I'm turning off the television. Regarding the Zelensky one, yeah, you know, I didn't see that, so I'm gonna go back and look at that because that's really interesting. I know they blew up in the Oval Office; they had a lot of, you know, really heated debate. But if Zelensky said that after the fact, I'm actually, yeah, I'm curious. I'm curious, very curious. Okay. I spent about $4,000 today because the stock market was down. I chose not to wait until a crash to buy. It's all about timing the market and not timing the market. Hell yeah. Yep. That is exactly it. Yeah, that's exactly it. I don't know. Like, I don't think there's going to be a crash. Okay. Like a 50% decline or something like we saw during the pandemic where, you know, the S&P dropped like 30% over the span of a couple of days. I don't think we're going to see anything like that. We'll probably see a steady decline, if anything, with, you know, bumps here and there, but I don't think we're going to see just an immediate drop. You know, I covered what a bear market is, and a bear market is a prolonged amount of time where the stock market, or, you know, pretty much the broad market, drops 20% in value. So, right now we're not that, you know, we're not doing terribly. Let me get these portfolios out of the way. I just got money all over the place. All right. So if we look, that's not what I wanted. We need SPX. Okay. So if we look at year to date, we're only down 2%, right? Down 2% year to date. But if we zoom out a bit, let's see, we still have a whole 12% to go. I don't know, guys. I don't know. Let's see. Over 5 days, we're down almost 3.5%. Over a month, almost 5%. Like, I don't know. I don't know if we're gonna get down to 20%. That would be interesting for sure. Let's see what else we got. Retired 2020 says added XDT and XPay. Dude, XDT and XPay are, in my opinion, not financial advice, are freaking phenomenal. They are outstanding picks. Roundhill just released a article comparing the two. I'll have to put it somewhere in the description. But guys, XDT, XPay, you cannot get any safer. Like, you cannot get any safer with these two picks. Like, they're freaking, man, I swear. The brainiacs behind Roundhill and those two ETFs, they knew exactly what the market needed. And I think it's only a matter of time before all these YouTubers start talking about XDT and XPay. For a while, everyone was discounting them, saying they're trash, they're stupid, this is that, you're not going to get paid, you know, it's not going to do this, it's not, totally irrelevant. The NAV maintains itself. In an up market, you're not going to capture the gains, but you'll get paid out the distribution. But your $50 will, you know, when you buy it with $50, it'll be worth about $50 in the future. Okay. I think it's a phenomenal product, and that's why I like XDT and XPay. Gold went up to almost $3,000. Bought a bunch of gold. Man, I wish I had your own money. Let me hold a little bit, BR. Just close your eyes and ignore the noise. Yes, absolutely. That's exactly what you should do. Don't give into the fear. Don't give into the, you know, just don't give into the fear. All right, guys, be prudent, smart, long-term focused investors. That's what you should be doing, in my opinion, of course. All right. A lot of stocks dealing with collateral damage. Those are the ones to buy. There is a lot of stocks dealing with collateral damage. I think the whole market is collateral damage at this point. I think we're collateral damage, you know, we're acceptable losses. That's you ever hear that term? So during D-Day, back in 1945 or 19 whatever, was it 1945? No. Anyways, I don't know my history as well as I should. But basically, you know, there's this idea of acceptable losses, right? When they stormed the beaches, they're like, well, we can lose up to these many troops and still be okay. So this is exactly what, unfortunately, you know, that is an unfortunate way of looking at it, you know, especially being a general and looking at it that way. But, you know, it has to be done. But the stock market crashing, these are acceptable losses, right? It's just, it is what it is. Anyways. BR Supreme says, kudos to you for sharing your portfolio with us. Hey, man, no problem. That's what I do. I want to be completely transparent with you guys, all right? I don't want to be hiding stuff from you guys and losing my integrity because there's too much of that on YouTube. Too much of that crap, especially what's happening now is YouTubers are getting sponsored by some of these fund managers. So now they cannot speak out against these funds. Like, imagine how bad that is, like how that looks. That is, yeah, that is, I can go on and on about something like that. Anyways, I'm going to move on. I wouldn't touch margin with a 200-foot pole. Well, good. Good. Margin is definitely scary. Yep, don't margin. It's scary, especially right now. I mean, I'm already margined, guys. Like, you can't tell me not to margin. I'm already margined. I'm already margined to the tits, as it were. Let's see. James says, I'm planning on going hard on margin once the trade wars calm down. Awesome. Please be careful. Please be careful. Do not do anything stupid. All right. Make sure you watch my video if you haven't already done so. James, I already know that you have, because we talked several times already. So I know you're a little smarter than the average bear. So I know you're going to understand the whole concept behind margin stacking. So let's see. Oracle. Hey, welcome back, man. Do you think Retire on Dividends is sponsored by yieldmax? So I don't think he is. But you got to look. So Jay Petrocelli of yieldmax, he went to, what was it, the stock exchange to bring in his new ETFs or whatever. And he brought a lot of YouTubers with him. Okay. He brought a lot of YouTubers with him. Now all these YouTubers are emboldened and they think they have clout and they think, you know, they can ring up Jay anytime or day. But really take a step back. And I'm not bashing Retire on Dividends. I'm not bashing any of these. I'm looking at it strictly from a bigger level, okay, a different level. I'm looking at it from a bird's eye view, and this is what kind of irks me. Jay is playing the long game with these guys. He's playing the marketing channel game. He's using these guys as a marketing channel. These YouTubers, these people think they are getting clout. They're getting some type of, you know, like, oh, I'm so cool because I know this guy. I have him on my cell phone. I can reach out to him. I'm friends with him on Facebook. I have him on LinkedIn. Like, we talk every single day as if we're boys, right? But Jay is probably the smarter one out of the bunch because he's basically using them to market all of his funds that he's coming out with, right? And all these YouTubers, they're not going to speak bad about it, right? They want to maintain that relationship that I know a fund manager and you don't type of thing, right? And their audience is going to eat this up. So I think, you know, they're basically just marketing channels. In my personal opinion, all right, I'm sure Jay's a nice guy. I'm sure these YouTubers on a personal level are very nice people, are very good people. But, you know, I see it for what it is. And this is no different than what happened with FTX. When FTX was around, all these YouTubers were peddling the shit out of it. And then when FTX collapsed, because basically they were making up fake money and this and that, all these YouTubers deleted a lot of their videos where they were promoting FTX, and a lot of them try to avoid taking accountability, right? And their audience were the ones that got absolutely devastated by this, right? Whenever they pump all these fake sponsorships for all this other crap, like, it's just saddening to see. And this is why I am vehemently against people, YouTubers, I don't care who are sponsored by financial institutions of any sort, that peddle it to their audience. Because the only thing, if history is any sign for us, it only usually ends up bad. All right. It usually ends up bad. That's just it. And the audience is the one that gets screwed. Meanwhile, the YouTuber taking on all that sponsorship money, basically throwing their integrity in the trash can, you know, they get to laugh all the way to the bank because they made so much money. So I don't care. You can't change my mind about this. It is something that's very, prevalent in this space, and it just sickens me so much. So I hope I answered that extremely well. Yeah, retiring on dividends. He, you know, all he does is talk about the cover calls in the spreadsheets for yieldmax funds. I don't really watch his videos, you know, in depth, to be honest, because I don't get any value from them. There's no value in me understanding what the cover call actions, or if they're winning or losing. Like, I don't really get anything of value, right? I like to watch YouTubers that, you know, have actual, like, specific action steps that, you know, actually walk you through how to do a research on an ETF, not just, oh, this is a new ETF from yieldmax. It produces this much dividend. This is how you could retire. Just dump a bunch of money in there and retire. Like, there's no value in these videos, in my personal opinion. And that's why I like to do, you know, more in-depth type of stuff. Like, again, and I hate self-promoting here. If you look at my Palantir video, like, I really went into the weeds on that one. Like, there was a lot of digging in that one. it wasn't just, me looking at the stock, looking at the price chart, and then looking at, what other YouTubers are saying, and then, parroting what they say. Like, no, this is a lot of work put behind this. And this is why I'm so confident in my PLTW pick. All right. Aside from the REITs, okay, which is where I pretty much, cut my teeth on. Aside from the REITs, I've never done due diligence on individual stocks outside of real estate. So it was crazy to start going down this rabbit hole and then seeing holy crap, this, this is not that hard. First off, to come up with a bull case or a bear case, or to say, I want to invest in this or not, right? It's not hard to do all that research, but a lot of YouTubers just avoid doing that or avoid showing that, and instead just parrot what everyone else is saying. And it creates this echo chamber, and it drives me up the wall. Anyways, I got to get off this because I am getting mad thinking about it. I could drone on and on about it. Anyways, guys, I got to get off here. I want to get ready. I have some stuff I have to do, and then I want to be available to watch this incoming, this big show that President Trump's going to be putting on in Congress. So I recommend people watch it. Definitely tomorrow, your guys' time, I will be going over it and giving you guys my thoughts. Hopefully, we have a green day tomorrow. All right. I'm hoping we have a green day tomorrow. You guys have a great night. You guys have a great evening, rest of your time. All right. I will see you.